In this video, we're going to do an example bank reconciliation. If you want to follow the problem, it's PE 7-3A. So in this problem, they just give us a list of amounts and then ask us to calculate the adjusted balances on the bank reconciliation. So they provide us with the balance per bank, balance for company records, bank service charges, deposits in transit, NSF check, which is non-sufficient funds, outstanding checks. So we'll start with the cash balance according to the company. Sometimes you see this referred as book balance is 27,475. And then to that we would add any unrecorded bank credits, which would be things like if they collected a note receivable for us or if they collected an amount of money without us depositing it. We didn't have any of those. Next is deduct any unrecorded bank debits. So in this case, there was two. We had a non-sufficient fund check. That means we deposited this and recorded it in our company books as increase in our cash accounts, but then the person who wrote us out the check didn't have the money in their account. So we need to deduct it so that we match our book balance. And then, so that was for $3,400. And then there was a bank service charge of $75. So that means we saw that fee on the bank statement and we also need to record that in our books. So the total will be $3,475 will need to be deducted. And that brings us to an adjusted balance of $24,000. Then we'll start with our cash balance by bank, which was $25,500. We'll add any deposits in transit because that means we deposited a check into our bank account, but it hasn't cleared yet. So we've already recorded that income on the books or whatever it may be. It's an increase in cash, but it hasn't actually gone in yet. So we'll add that on our bank statement so that we match. We had a deposit in transit of $7,500. Then our outstanding checks need to be subtracted because those are amounts we paid other people, but they just haven't deposited the check into their bank account, taking it from ours yet. So if we start with the $25,500, add $7,500 minus $9,000, we end up at our $24,000. Check that it's equal, and we know we are probably all accurate. And we would need to make the journal entries that were affecting our cash balance according to company. And that's it. Let me know if you have any questions.